Hey gang, Dennis Tubergen here with another video market analysis. Today is Tuesday, March 20. Just a heads up that there will be no updates next week, starting with this Friday, the 23rd, going through the Easter holiday weekend. There will not be any daily market video updates. They will begin again on April the 2nd. If you take a look at the chart in front of me, it's an exchange-traded fund that tracks the price of the Dow Jones Industrial Average. We've been saying that we believe the highest probability move here for stocks is down, and we say that for a couple reasons. One, if I were to draw here a trend line, kind of this direction or so, that's not exact, but you can see that we have a series of lower highs. So that certainly is the first thing to make us think that the trend for stocks may be down from here. We also took a look at the Fibonacci retracement levels here. And if you draw the Fibonacci retracement levels, and I'll go here, you see that from top to the bottom here that we see prices pretty much bouncing off these retracement levels. So that tells us that we believe the primary trend here is still likely down. Now if you look at yesterday's market action here in the Dow, we have what's known as a lizard bottom, and the reason it's called a lizard bottom is that if you look at a Japanese candlestick chart, which is this chart, whenever you see the wick of the candle going down, it kind of looks like a lizard. You often see that at market bottoms and market tops. Now, not always, but if you take a look here, that's a really good lizard bottom, and the market took off from there. So if you look at what happened yesterday in the other markets, here's the S&P 500. Very similar chart structure to the Dow. The one difference is that the S&P did make a little bit more of a higher high here. So it's not a perfect textbook retracement levels, not a perfect textbook downtrend here, but we think the odds favor that. This is a small cap index. It's an ETF based on the Russell 2000. You see that that came back and equaled its prior highs. However, since that time, we see that the market has declined here. And the one outlier is NASDAQ, which did make a higher high. However, it gapped down yesterday, as you can see from the chart. Now, if you go back and look at the market tops in 1987 and in 2000, we saw that in both cases, the Dow made an all-time high. And then about 6 weeks later or so, the NASDAQ made an all-time high. So this market pattern is tracking very closely the market tops of 1987 and 2000. We're still advising folks to be cautious here, and we still think that the highest probability move for stocks, next big high probability move, is down. So that's the market video analysis today for Tuesday, March the 20th. I'm Dennis Tubergen.